Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, daily chart. And here we are. I mean, we're just jammed in this box. We've seen some smaller range days. Today is not a particularly large range day so far. Globex was 16 and a quarter. And it just continues to hover between the 20-day and the 9-day. It's been involved with the 20-day and the 9-day for the last, going on 7, what's that, 3, 6, 7, 8, 9, 10, 11. So 10 of the last 11 sessions. We've been over the top of the box. We've been under the box a couple of times, and we just keep coming back into the middle. So hourly chart, and you can really see it here. It just continues to consolidate. You've got everything from monthly pivot. The weekly pivot moved less than a handle. 41.39.17, 41.39 even. That tells you everything you need to know about the last couple of weeks in the tape. Price has been very non-committal. It's probed either side of the edges, but it has reverted back into the middle of that range. So here we are. As I'm taping this, we had retail sales, which were less than expected. They took it down to test weekly pivot, not quite the 9-day. Back up to test that pre-FOMC price. That was your reaction high off of retail sales. That's been resistance for the last 5 or 6 hours. What do the bears need to do? Can you break that low? Is it really that tough, guys? If you can do that, then you got to get into the prior day low. Until one side or the other is consistently taking out either the highs or the lows of the previous day, we're going to continue to stay in this box and just come on back into the mean. So what does that mean for trading? That means don't get ideological and start talking about how we're going down a bajillion points or up a bajillion points. When it does that, there'll be plenty of room and plenty of time to get involved in that trade as it does the next leg of the market. What you need to do now is you need to be flexible, nimble, take profits where you find them, recognize when things don't or are not working out, or something is becoming support, or something is becoming resistance, and reverse field. It's that simple. We came in, we shorted basically the 43 area, but that came in, and we're like, you know what? They can't take out 28, 27, 28, 29, early in the day. So we're going to go ahead and, we're not going to do that. We're done. So we ended up buying it down there, and we rode it back up. And then when it couldn't deal with, with monthly pivot up 52s, well, fine. We'll try some other shorts. Then the afternoon got really choppy. That's the other byproduct of this range. When the thing doesn't want to try, it gets really tight and really choppy. And my suggestion is those are the moments where you've really got to slow your trading down. If not, just, go flat and wait for the next opportunity. Don't hyper trade a choppy range, chew yourself up, give back, hard fought handles that you earned when it wanted to move, because you're kind of trying to project your desire for the market to be more volatile than it wants to be. You are projecting your desire for the market to be more volatile than it wants to be. Let that sink in. When you are hyper trading, or you are revenge trading, or you are doing whatever it is, it's because your feeling in your mind is that the market should be doing A. And the market's like, no, we are doing B. Or worse, we're doing C, which is nothing at all. But if you just keep hitting A, you're going to be like, where did my day go? Well, you chewed it up in commission and too many trades and little losses and paper cuts and this, that, and the other thing. And now you're all frustrated. So just about the time when you're done being, maximum frustrated and you take your ball and go home, then it wants to make the next move. The only problem is your brain's jello now. So you have to avoid that in these kinds of tapes. Have to avoid that. All right. You've got volume weighted average prices at 44. Everything is basically jammed between 39 and 49. Okay. And, by a stretch up to monthly pivot there at 52, 58. But for today, for right now, it's really 39 and 49 with a little bit above to the monthly pivot at 52 and a little bit below to the 9-day at 37. Okay. Daily mid-band's 41. Daily pivot 42.67. Yesterday's open was 43. And then you've got proprietary moving average, volume weighted average price, 5-minute mid-band, and hourly mid-band, all between 43.5 and 45.5. So there's just a ton of inflection points to deal with, no matter which way the market's moving. So be flexible, be patient, take profits where you find them, recognize when it's not working, do something different, and if it doesn't want to do anything at all, then you don't do anything at all either. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.